Hi, Mike Swanson here from TradeWestForex.com. I've got another video for you. I've gone ahead and went over a couple of traders' strategies and dug into them to see what we could do to improve them. Based on the video I released earlier this week, what we want to know is why should we be using this strategy, why should it be working, and how, that's going to help us know where we can make improvements. So let's take a look at this strategy here this is somebody that's using multiple indicators to have a trend following system. This is being traded here on the Euro-Dollar 15-minute chart with the 34 EMA, MACD default settings, RSI default, and then this is an indicator I added, and I'll show you what we're doing with that. So they just had these three indicators, and what was happening, they're waiting for the price to get above the moving average, for the MACD line signal to cross, and for the RSI to be above this upper level at 70%. So you can see I put an arrow here when that all took place. The problem with this strategy is there's too many things that have to line up before you can take the trade. It's all lagging indicators, and these indicators are not designed to be used the way that this trader is using them. The MACD is not used as an entry signal when there's a crossover. It's used for divergence. It stands for moving average, convergence, and divergence. So that's the first mistake, is they're using an indicator that is improper. They're not using it the right way, and the RSI is being used correctly. The moving averages make sense as well. So it's just this one indicator that they're not fully understanding. And then the other thing about this is they don't really have an exit strategy plan. It's all pretty much as soon as these things take place, you take the trade. They don't have any filter for trending and range trading, because that's something, if you're going to trend trade, you need to know when a range is about to take place so that you can filter any signals during that time. Otherwise, you're going to get whipsawed, and that's when trend following systems fail. So what I've done is simply came in, we're going to get rid of the MACD indicator since it doesn't make sense for the way they're using it. And then I've added a Williams percent range indicator, and I've set this at 200, and this is a longer term average. Now, the reason I use 200 is I want to know if the trend is strong and when we're in a range mode. So when it stays above this 20 level, we know it's in trending mode. When it goes below, we're in range mode. Okay, so if we look at this setup now, the same signal would have been valid. It was above the percent range level, the 20%. So we were in trending mode, so it was still a valid signal. Now over here, we had a sell signal that they were going to take, and they got in right at the bottom. All the signals and indicators took a while to line up, and this indicator I've added filtered that trade because it says you've made this major change in trend direction, it's possibly a whipsaw, and the indicator went in between these two levels. So we're pretty much in a range mode now, and you don't want to be shorting at the bottom. So there was room for a little bit of profit, but it pretty quickly came back and would have been tough to manage that trade. So this is a basic example of making some adjustments so that the system makes sense. And I'm sure if we were to go back over several trades with just these minor changes, it would have a big change on the results of this strategy. So let's look at two more. This is a 5-minute pound chart using the awesome Oscillator. Some of you might have used this before. This trader was using a very simple approach, and then I've come up with something that you can add to make this more effective. So the idea with the awesome Oscillator is you try to pick tops and bottoms at extremes. That's one way of using the indicator. So the indicator is being used properly. The flaw in this indicator is when you go into choppy movement. So these two blue lines I added, these do not come on the indicator. So when you see all this choppiness, you really don't know that there's a range or anything taking place. So what's happened? What'll usually happen here is you'll get a nice trade, but you give back a lot of profits first of all. That's something we need to look at. There's a way to fix that. And then when you go into this range, you'll constantly get buy and sell signals back and forth. Whenever it changes green, you buy. When it changes red, you sell. And it does that several times. So those of you that have used this indicator have probably been whipped around a lot by it, and you've probably moved on. So let me show you one thing you can do here. It's actually really simple. Is you only trade the awesome oscillator at extremes. So you can come in here and set those points, go back in time, and kind of see where the range takes place, where those levels are at, and we can pretty much put it inside of that area. And then when we move forward into the current time period, so here would be, we're looking at the charts, we're right here, and then it starts to break out. Well, that signal would have been valid. It worked out nicely, came back up. Now you got back inside the range, you wouldn't do anything. You would stay on the sidelines. Okay, and then when it jumps outside of the range, you can buy, turns the other way, and you can buy again. Okay, so when you get this volatility, the indicator works well. It's when you get inside the range. So that's one adjustment you can make. And then something else I want to point out about this style of system is it's not going to have a really high win rate. You're still going to have trades like this one that ends up flipping right around and losing, flips around and loses, flips around and loses. But then here you hit a big profit. And over here you had a nice profit run. So this is a system where you have to keep in mind your risk to reward ratio is going to be very good, and your win-loss ratio will be less than maybe you expect. So you don't want to give up because of that. What you want to do instead is try to make the best of that style of system. And one thing you could do is increase your leverage on trades that have higher probability. So we know this trade here had an extreme price move and has a high probability of winning. So we may want to take that trade more aggressive so that when we make money on this one, we make even more money than we normally would have. And then when we go and take a trade like this over here where it's a lot tighter, it's maybe half the extreme that the other one made. So maybe you trade half as aggressive. So when you take that loss, it's not a big loss. That's just one minor change you can make there. And then the other thing I can see here is the opportunity for scaling in. One thing you might want to look at is if the trade's going well and you cross the zero line of the indicator, possibly add to your position so that the remaining move up, you're making more money, and that'll help increase your probability, or what we call the expected value of your strategy. Okay, so these are just a few basic things. I know it might sound simple, or some of you might look at this as a nice opportunity, something to go test out with your own strategies. But let me look at one more, and then I'll do a little recap. This is a breakout strategy, very simple, using fractals. So fractal breakout, very popular. Works very well if you know what you're doing and you apply some filters. But if you don't, you get whipped around a lot. Here's a false breakout. Breaks the fractal, you would have taken a buy trade. It only went up a little bit before whipping against you, breaking the other previous fractal, and then going the other direction. So you got a double whipsaw. And then you had a buy trade here that worked out for a bit and then turned. And then a whole bunch of back and forth up here. Whipsaw. So that's the other thing. With breakout systems and trend following systems, whipsaws can hurt you. So you need an indicator to filter this. And once again, we can grab, we can grab the Williams percent range, or we could even grab the relative strength index to know how strong price action is at the time of the breakout. And you can see this one, the strength was right in the middle. It had no clue which way the market was going. This one here, the strength was getting right up there. So if you held off until it came over here, and then waited till the price moved up and broke that fractal, you would have avoided that drawdown. Over here, you would have filtered out all of those false trades. So the idea here is to make sure you're using indicators that make sense for the type of system you're following, and then also, doing things like scaling out and increasing risk on higher probability trades. Those minor things can make a big difference. And then, like I showed you on the awesome indicator system, the idea with that one is don't just take a few trades, get whipsawed, and then give up on it, because there's always going to be the the big runs that make it all up. So you've got to fully analyze and review a system, go back over time, apply some indicators to it possibly that make sense. If that's what you're going to do, is trade with indicators. This is the type of things you need to be doing. So if you're, let's show one more example that I didn't really prepare here. Let me just go ahead and get a new chart up real quick on the pound. I'm going to show you a style of trading I like to use, which is basically, I mean, you can do this. This is one strategy I use, is this basic price action, buying pullbacks to previous consolidation, or selling pullbacks to consolidation. So let me show you how simple this is, and I'll show you why this makes sense. We'll analyze why this strategy should work. Okay, the idea is when we break out of a consolidation or congestion zone, we'll likely see a pullback to that area where traders that got stuck close their positions and cause resistance in this case. I'll show you what I'm talking about, but the idea is it pulls back and then resumes the trend. So makes perfect sense, and let's take a look at what we would want to see. So here we had the consolidation, a lot of price action in here, a lot of traders buying and selling. It finally moved up against those that sold in here, comes back, settles for a bit. All those guys that sold were deciding, hey, should I close my trade now? I'm up a little bit of profit. So they start to do that, which then pushes the market through lower. Okay, now that the market broke that consolidation zone, now there's traders stuck on the buy side. Okay, so now traders are stuck on the buy side. The market's going to pull back and test those guys and give them the opportunity to get out, or maybe they'll be down a few pips. So it comes back up to that consolidation area, and those buyers sell to get out of their trades. Now that's caused resistance, and we would want to sell that resistance. So there's an opportunity to sell, market resumes the trend the other direction. So that was just a very basic walkthrough of a price action system that makes, as we look through it, it makes sense of what's going on, why it should work. And like I've taught in the past, entry is only one component. That's very easy to find the entry. There's even some filters we could apply here. If there was if it were to push through the top of the channel, maybe we wouldn't take the trade. But the thing is, once I get into a trade like this, if it starts to fail and consolidate, that's one rule where I like to get out immediately. Because the idea with these pullbacks is they're supposed to come back with momentum and then quickly turn the other way. So I might have wanted to scale out part of my position and move the rest at a smaller stop, so I could potentially catch this bigger move. But let's look at one more example on this, and then we'll take a look at what a quick pullback to the consolidation area, resuming back in the trend direction, what that looks like. Okay, so let's see. Here's a consolidation area. Okay. Now it doesn't always have to come right to the pip. Every broker's price feed is going to be different. So if it misses it by a few pips, I don't skip the trade. I still would look to jump into this. You can see it came either right on top of it or very close to that top of that range. It tested, and you can see it immediately took off the other direction. So with systems like this, you want to be sure to keep your stop small. I mean, I didn't need to have more than a 20 pip stop to capture an over 100 pip move. So you always want to be trying to aim at increasing your risk to reward ratio, getting that optimized as best you can, and that's going to help you be a lot more consistent and keep the profits in your account that you make. So hopefully this stuff helps you guys. I'm going to keep feeding you guys more and more videos every week, or even every few days. So be sure to follow us, subscribe to our email newsletter, our YouTube channel, follow us everywhere that you can, because this is all free information, and if you apply the principles, I know it can improve your track record. And in my next video, we'll be going over one of my personal strategies that I use on a daily basis. I'm going to be giving you an indicator that goes along with that. So make sure to subscribe, follow us on YouTube, subscribe to our emails. That'll be sure that you get these updates when they come out. So We'll talk with you in the next video, and good luck trading.